people need to be prepared to suddenly see a for sale sign next door because there's just so much leverage out there.
So I'm going to ask you this question that's specific to help me. Sorry about this, guys.
I want to ask you about home builders as a stock.
The reason I got really concerned is when I went out on the road in 2023 to all these new build communities all over the country.
I've never desired to be a real estate investor, mainly because I hate people.
I think the rich got real rich, the middle got gutted, and the poor got government handouts.
But let me tell you, somewhere like Atlanta, they own about 30% of the single family rentals stock.
I exist as a representative of the gun show.
Obviously.
Are you seeing a huge bifurcation at different levels?
I am, but I'm starting to see weakness in those very wealthy areas. I'm starting to hear about canceled sales in Westchester County.
Welcome to the Future's Edge. I am Jim Iuorio. That's Bob Iaccino. Today we have one of my favorite people because the real estate market is something I've been so interested in for so long. We have Melody Wright, who is a absolute guru of domestic real estate. We get that second, some housekeeping things first. First of all, thank you to our favorite sponsor, Independence Arc Farms. I'm telling you, I eat those steaks about 3 times a week now. We all complain about how the big conglomerate food companies have taken over the food system. There is something we can do about it. We can start patronizing small, independent farms like Independence Arc, and you won't be sorry at all. Melody, where are you coming to us from?
Johnson City, Tennessee.
I know of Johnson City, Tennessee because of Wagon Wheel. Right. Who wrote Wagon Wheel? Can anyone tell me who wrote Wagon Wheel?
No.
Bob Dylan wrote it, and then he didn't finish it, and then that Old Crow Medicine Show took it and finished it up. But Johnson City, Tennessee is the only reason I know it is because of that song. That's very cool.
Yeah.
One last thing, by the way, too, I have to mention that Bobby and I started the Unfiltered Investor with newsletter about 2 months ago with Mike Arnold. And, you know, I contribute to it, but those two have been absolute rock stars over the last 2 months. So you guys who have picked us up and have subscribed, thank you so much. Please check us out at theunfilteredinvestor.com. Anyway, so Melody, by the way, I just got caught in traffic coming home from the city.
He's all stressed out.
Fortunately, I'm all stressed out, but I did listen to a fabulous podcast that starred you with Adam Taggart, who I love too. I love his podcast. He's excellent. By the way, and I was curious because I couldn't look over to see what the date on it was. When was that from?
Oh boy, I think that was last week, like 5 days ago. Yeah, about a week ago.
Good. So it's definitely, we're in the realm of this, right? So
yes.
So a lot of things
Absolutely.
you said I thought were amazing to me. And there's some things that I don't agree with you on, but I'm going to give you a chance to
Awesome.
convince me because you are the expert in here. I am been a real estate investor for a long time. But first of all, let's comment on something which I think is going to be taught in business schools for 100 goddamn years. And that's when you take mortgage rates from 2.8% to 7.5% in 10 months time, expecting to break up the housing market. And all of a sudden what you do is get people who are thinking about selling to hold on to their 2.8% mortgages like grim death, and you lock up the supply. I've never seen anything like that before. Do you have any comments on that?
Yeah, I think that was not the only reason supply was locked up. I think there was a ton of speculation, and, people were doing the extended pretend and stay alive till 2025. And so the rates could have been part of it, right, Jim, because they couldn't refinance. And so they were kind of locked up anyway. Fannie Mae did their own survey of people who had those low mortgage rates. And honestly, only about a third of them said that the low mortgage rate is why they wouldn't consider moving. So it was something that got a lot of play in the press. But when you're a real person who has to move for a job, rates are not going to be the determining factor of what you do. You may hold on longer, which is what I think people did because they could, and because they could get leverage somewhere else or access capital somewhere else to take care of whatever they need in 24. But in 25, people are running out of options.
Melody, what do you think is the real force behind the weakness in existing homes? Is it just rates? Because we didn't see that weakness in the new home sector, but we do have, those big companies kind of buying down mortgages. And while we have actually seen the 10-year drop, it's not by much. Inauguration day, I think it was 456 or 457.
Yeah.
Now it's 439. I mean, it's a blip. So
And it
what's the
was
real
for, yeah.
driver at this point? Yeah.
Yeah. I mean, it's prices as well as, wages have just not kept up. I have a slide where you can look at both existing home prices and new home prices to household median income. And you can see that this is the most distorted that we've ever been. And so it's people simply can't afford it. They don't have the wages, even with two incomes, to afford these homes, plus the insurance and property taxes. And so I think that what you have is a lot of rampant speculation, and you can look at any of these cities. You can look at San Diego, you can look at Austin, you can look all over the country, and there's no reason you have 15,000 short-term rentals in Austin. There's no reason you have 12,000 in San Diego. There's no reason you have 36,000 in little Hawaii. So it started at the end of the last crisis when Wall Street came in, and they at the behest of Fannie Mae and Freddie Mac, came in and started purchasing all of those homes at auction. And I was at those auctions. I can attest that's exactly what was happening. They purchased them for long-term rental, but then the bug was out there. You could turn on the television and see fix and flip. So everybody decided to buy a home, flip it for long-term rental. And then short-term rental came along, and the lenders got involved and said, why buy one? You can buy 10. And I worked with those lenders that said that. And so ultimately, and you can look at it, it's very interesting to look at actual production or origination and look at the cycles, from the late 90s. This COVID boom was very small because we tried to juice the economy through housing. We do that almost every time since the early 90s and late 80s. And it's the law of diminishing returns. So let me ask you a question, and I know I'm talking a lot, but what do you think the average household size is right now?
What do you mean in terms of people, earnings? What?
People.
Average household people.
I'm going to say between 3.5 and 4.5.
3.
It's 2.55, guys.
Ooh.
So
Okay.
do you think we have a housing shortage? No.
Yeah.
We have 15 million vacant homes. We have 3.3 million vacant seasonal homes. What we've done is really try to get every Tom, Dick, and Harry either into a home or get them another home because, our Gen Zers, our millennials, our younger millennials, they can't afford anything. And so what's actually been happening is that average household size has been going down, as have our birth rates. As we know, our demographics are abysmal. And so unless we want everyone to have one house each, we are way oversupplied.
So what is then keeping prices elevated? I mean, look, as somebody, I'm older than I look. I get my first mortgage ever was like 4 5/8, and I was dancing in the streets about it. I remember
100%.
thinking how great that was.
Yes.
And now I hear people 20 years younger than me saying, you just can't sustain. It can't sustain with rates where they are. The median home price, according to St. Louis Fed, is now down to about, what does it say here? 416.9, but that's only down from 442. So what is keeping the prices up if we got such an oversupply, in your opinion?
Well, I could go into a whole
Please do.
theoretical argument that they're not really up, but in reality, the only people that have been transacting out there recently are the ones that can afford it. So we had the worst existing home sales we've had since 1995, and we've increased population by over 20%. So that's crazy talk. Okay. And why was that? Home prices were too high. Who did transact last year? Our top 20%. You can look in both the new and existing home series and see that the biggest share or the increases were in that 1 million plus. Now, people will argue, well, yeah, of course, homes are more expensive. No, I mean, what's happening is the stock market went up last year. The top 10% got excited. They went out there. Investors thought, okay, it's all going to be okay. So they kept it churning. And so the only houses transacting were those higher price homes. There was hardly any homes on that lower end. And now builders, to your point, Bobby, is that I was about to say, is it Bob or Bobby? But it says Bobby right there on the screen.
Yeah, I'm in the South.
They get it. And by the way, those top line prices aren't the real prices. So the builders are doing a few things. They're buying down the rates, but guess what? That was happening on existing homes too with Fannie and Freddie, but they're buying down the rates. They're giving concessions. They're paying their HOA fees. but they're not even taking that top line price down. They should be. But guess what? They've started cutting prices now, and they are coming in far below existing home prices. So they understand that's how they're moving inventory.
So you mentioned the stock market, and the stock market has had an unbelievable rise since that asinine April 8th low. Is there a connection between asset prices, non-home asset prices, and home prices? Like, what's the correlation? If stock market goes through the roof, do people feel emboldened to kick up money for a bigger home?
Well, I think so. There's a couple of things. So one, you have the wealth effect from your stock portfolio. They used to talk about just in terms of homes, but in reality, it's your stock portfolio, as well as, Jim, what a lot of people are doing, we're borrowing off of their equity portfolios to get all that cash to do those all cash purchases. So it absolutely has a correlation. One of it is just sentiment. It's like, a lot of people look at the stock market and gauge the health of the economy that way. And so when it looks up, they're like, okay, I'm good. And it changes things. But in reality too, when it started kind of coming down, people had a lot less access to cash because they're borrowing off their stock portfolios.
So I'm going to ask you a question that's specific to help me. Sorry about this, guys. But well, first of all, I'm going to a couple things, Bobby, because when we get later in the show, I want some takeaway how to, if prices are really going to down, how we can short the market and not like they did in the Big Short, because there's much easier ways now. Secondly, have you lived in the South your whole life?
Me?
Yeah.
Oh, no. I've lived in the Northeast.
Okay, because it's funny because I have some friends from the South, and we always joke about the way we say words. And the one thing that always comes out is that in the North we say insurance, and in the South they say insurance. And you said insurance before, like a real.
Been there long enough.
But I grew up in the South, yeah.
Okay. So now to my question. So I have a home. I was just talking to my partner in real estate today. We own a property that we're thinking about what to do with in the mountains outside of Winter Park, Colorado. 2.5 acres, a nice home. It's done really, really well. I'd call it higher end. I kept it for the last couple of years, even though I wanted to sell it a couple of years ago. Do you see inventory in those mountain homes area coming down, or is it just by cities? Where is the geographic location of where the prices are coming down?
Well, in terms of where it's happening now, it is geographical, but I absolutely believe it will be national. And again, there will always be certain areas that will do better than others, but I think people need to be prepared to suddenly see a for sale sign next door because there's just so much leverage out there. And Colorado, I can tell you, Jim, these vacation areas are getting hit really hard because this is where everyone, you think about what we were all talking about in 22, inflation, people were concerned. So what did your wealthy do? Everybody was talking about get into hard assets, get into hard assets. And so where did they go buy these places like Winter Park? These places like, around here, Sevierville, Tennessee, because everybody's like, well, people always vacation. I'm sure people say in Winter Park, well, even if it's not people from all over, people from Denver are going to come or blah. Like I'm sure there's some form of recession proof that people talk about these vacation areas, which is just ludicrous, as you know. I mean, when it gets bad enough, it doesn't matter where you are. There just aren't enough people to come. So,
by the way, all this, what you're talking about, the inventory coming to market, prices starting to decline, this has all happened before there's been any dislocation in the labor market, which would obviously really, really kickstart any sort of inventory coming to market, correct?
Correct.
Yeah. Bobby?
Right.
Yeah. Before I go to this next question, I just want to mention something because I said I would. And Jimmy, you mentioned patronizing local, small craft. I went to a gun show this weekend, which Melody, you see when you drive through Tennessee. And Jim, you would have to drive about an hour and a half south east.
Melody got the joke.
Indiana. Melody got the joke. I exist as a representative of the gun show on a daily basis.
Obviously, Bobby.
Obviously. But no, I went to a gun show and Frank and Mary Shields from the American Roasters, I met them on Sunday. And they're local Florida coffee roasters. They roast their own beans. They source their own beans. And then they go do other jobs. And they were at this gun show and I bought a couple of, I think I bought 3 bags because it was a Father's Day special. I didn't tell them I don't have kids, but I got 1 bag for free. bought Dry Fire, which is decaffeinated, bought a 1791 medium roast, and then I bought a True Freedom dark roast.
Curious as to where the hell this is going.
Well, the reason I'm bringing this up is because they're not a sponsor, and I'm not going to ask them to be, and I'm not going to ask them for any free coffee, but they were so nice, and their coffee was so good. You know, I got sample after sample after sample. I just want to tell people, the American Roaster, if you're behind us and like supporting small brands that are local and you're anywhere near Florida, I think they ship nationwide. But it is, what is, I got their card right here. Frank and Emily Shields, theamericanroasters.com. Okay, enough of that. Not sponsored. I won't make any money. I won't get any free coffee. Frank and Mary, if you hear this, I'm not asking for any. Okay, I want to ask you about home builders as a stock, because we already talked a little bit about, Jimmy mentioned that we're going to talk about how to short these things. And I recently shorted XHB. And I'll put the chart up, Jimmy, if you want.
Please, I want to for sure.
Yeah, I hate the chart. And it's not because I have any sort of I live in a vacation area, obviously, right? And in my community, which I would call medium end, unlike Jimmy's house, which he would call high end, 31 houses for sale, and they're all just dropping. There's only 318 houses in this community. And they're all just like, it's like slash and burn who can get the price lower. And this is the Home Builders ETF from the Spider series of ETFs. And to me, this is just awful. It's this far below 200. The 200 has moved lower. You're talking about it being nationwide. Do you think it's more of property, or it's more home builders, or it's a mix of both?
I mean, it's everything. The home
The broad
builders,
housing market.
yeah, it's the broad house. I mean, you know, Bobby, the reason I got really concerned is when I went out on the road in 2023 to all these new build communities all over the country. And people say that they're only in the southern states. That's simply not true. They did it everywhere there was land, and they overbuilt in small towns that made no sense. And so the builders are in serious trouble. But what I always caution people about with the builders is that they always stand very close to a government handout. Lennar was bailed out last time through a tax bailout. So they know, and they have been visiting Powell, and they have been doing, they're going to pivot somehow to affordable housing. And so I worry about that when it comes to shorting the builders. But to your question, it's the entire housing market. I mean, right now it's really in the toilet.
I'm telling you, that's exactly what is said down here by the people who are cutting their price and the people who say, well, I'm going to sell my house, but I'm going to wait till the snowbirds get down here and then stuff will start moving. I don't know, man. I don't know if it's going to start moving. I really don't. The prices are blown out. Like this house that we bought here, we got lucky. We bought on the upswing, but we didn't buy anywhere near the top. And it's already down below. That's probably, according to Redfin, which is bullshit, is probably right around where we bought it. So my estimate is probably 20% lower than that. But this is our home. I've never desired to be a real estate investor. Never.
Right.
Mainly because I hate people and I would be really mad at my tenants if anything ever happened.
Well, I don't even rent out properties anymore. I used to, and I don't. We just use it and then just sell it. Yeah. But you go. Yeah.
Well, I was going to say, so if someone were to want to, I'm already short the home builders, but if somebody were to want to short the entire market, what's your thought on that?
Well, so this is an investment advice, but let me tell you who you should be looking at is non-banks. So your Mr. Coopers, your Rockets, your Freedoms. These non-banks are in for a world of freaking hurt. And all of them. So I come from within mortgage. I think you guys may know that. And I wrote out The Last Crisis, but I wrote it out knowing all of these folks. And many of the people at these non-banks were not around last time. They don't understand the government product, FHA. They went in hot and heavy because you get a little more juice. And they don't understand on the back end. It's they think it's fully backed by the government. That's a joke. I used to manage a claims department. Just think about anytime you filed an insurance claim or something like that, They always deny it the first time. So
Yeah.
mortgage is liquidity game. And so that liquidity has to just keep moving and moving. And the minute there's any kind of hiccup, and there will be when they're filing these claims and not getting paid because delinquencies are on the rise. And so in terms of opportunities, I think the non-banks are a big opportunity out there. And honestly, some of your banks who are already doing poorly, but that are in the auto sector heavily, and those in commercial real estate, those are some opportunities out there. The builders, again, are tricky, but there's nothing good coming for them for some time until the administration or some policy decision.
So quick thing, when you say the non-banks, the non-bank mortgage lenders like Rocket Mortgage, right?
Correct.
Okay, good.
Yeah.
So when I was in the car listening to your podcast, which was enthralling today, but there was one part of it that I was honking on the horn and giving someone the finger when you said something. Well, I think you said something, but I think I misunderstood.
Okay.
For clarification, the build up to 2006, 2007, or whatever the hell the bottom dropped out. For years, we drove around saying, "Who the hell is buying these homes?" And then we found out more about it. And the book, The Big Short, where a stripper in Miami has 6 homes. That was true. Those were true stories. I have not personally seen everybody jumping into being home flippers, not nearly to the extent they were in 05, 06. What about you?
Oh yeah. And worse.
Worse?
Like,
Tell me more.
oh yeah. and it's every speak to any millennial that had a decent job. They all have an extra home that they were going to fix and flip. And I go out on the road. I've driven over 10,000 miles, flown a lot more than that to go to these local communities and talk to people. And you would just be astounded how many people went out and bought an extra home because they were going to rent it out or do short-term rental. And so that's interesting you say that because I mean, to me, of course, I'm looking for it. I'm all over Reddit and social media looking for these stories, but I personally think it's bigger, but that could have been just about where I was at that time period versus you.
Well, certainly that's astounding. Yeah, I mean, we're because again, that was in my entire career. That was the most unbelievable. It left me shaking, my hands shaking sometimes, thinking about what was going on in the economy. And you think that could conceivably drag us down into another hole that was very similar to the Great Recession. But we have to talk about policy responses, right? So for you people watching too, generally, the average mortgage is held for 12 years. So it usually is tied to the 10-year yield, usually trades about 180 basis points historically above the 10-year yield based on 2 things. One is the inherent risk of homeowners versus treasuries. And 2 is like regulatory forms, all that bullshit stuff. I got that all right so far, right, Melody?
Typically in the industry, we say 7 years is the average life of a mortgage. But
okay. So interesting. So now let's talk about what the policy response might be. Trump has already talked about appointing his own Fed chair. If they came in and started buying a crap load, QE again, QE infinity at the first signs of a housing crack, could they stem the tide?
Well, they could potentially delay it, but if you remember, Jim, in 2010, you remember they started buying MBS during the GFC, and in 2010 they were putting all their hopes on a refinance boom, and it held us for about 6 months, 7 months. I remember because my company wasn't talking about bankruptcy for those 7 months. And then it just boom, it wasn't enough. And during that time, stupid us did exactly what Rocket and UW and all these companies are doing right now is we got in heavier on the FHA because we thought, hey, that's a really good, nice gain on sale and servicing strip you get. So, and then what happened? Those people started going delinquent. And then that's ultimately what put us into bankruptcy in 2012. So, a lot of people think of the crisis as 2008, but in reality, if you were in mortgage, that's when you were starting to get your hands, you were getting subprime under control in 2008. You were getting it under control. You were running it off, but then started your distress in prime, which peaked in 2010. And people they don't remember that in reality, the real foreclosure crisis was the prime book.
So where do you fall in the whole private equity buying homes in bulk? It bothered me on sort of an ethical and moral level, but as a capitalist and as a free market guy, I was like, well, I mean, they can buy it, they buy it, And I remember saying this to a buddy of mine, and he goes, yeah, but what you don't understand, he's in private equity. He goes, we will dump that shit faster than any homeowner. He said, well, as soon as this stuff starts hitting, he goes, that's going to be the accelerator pedal for another crisis. Where do you fall on that?
Yeah, so I'm like you. I believe in, free markets, and but at the same time, it wasn't exactly free what was happening there at the end. And the
They were getting better
GSEs,
deals on
they were
mortgage. Yeah.
they were feeding that crap to them, right? And they've since done that through their non-performing loan sales, which for FHA started before even 2008, but Fannie and Freddie got in 2015, selling them off to private hedge funds, and only certain people can participate in these auctions. That's a problem to me. And I think that we hyper financialized it, and it became it's about moving money through the system now and not about shelter. And so it's not a game for the first time home buyer. We had the fewest amount of first time home buyers since 1981. And that's when they started tracking the stat. That's National Association of Realtors. So this game is about speculation. It's not about shelter anymore.
So what percentage of the housing stock in this country is owned by private equity and not by primary residents?
You cannot get a good answer, Jim. And I mean, I got to tell you, when I first started doing all my research, I banged my head against the wall trying to figure that out. But let me tell you, somewhere like Atlanta, they own about 30% of the single family rental stock. San Antonio, huge amounts as well. So people have said, there's one stat I've seen that nationally it's only like 3%, maybe even less, but in certain pockets it's heavily concentrated. I don't actually believe that either, because I understand that there's over 3,200 counties in the United States. They have arcane recording systems to try and understand who actually owns these homes is almost impossible. And guess what? When you pay for it all cash, it's not tracked through something like the HMDA, or Home Mortgage Disclosure Act. So the only place you can find out who owns it is at the county. And by the way, if you live in California, you can't even find out there. And so we don't know who all owns these homes. And a lot of people hide behind trusts and LLCs and all kinds of things to obfuscate that. So we actually have no idea. But you look at somewhere like San Antonio, and they're slashing and burning there because there is such a huge institutional presence. And that is, you're seeing it in the home prices.
You had mentioned, when you said the non-banks, I got confused for a second, and all I heard was Rocket. You mentioned 3 other companies. By the way, this is not investment advice. This is for me to be looking at these charts of where a possible short could exist.
Yeah, let me put the charts up, because the Mr. Cooper one. So for those that are, again, not investment advice, but for those that want to front run this stuff, you got an opportunity in Mr. Cooper. Rocket's kind of already started, and I don't remember the third one either, but here's Rocket.
Okay, Rocket's already begun. It's under the 200-day and looking bad. Mr.
Cooper's still good. What was the third one, Melody?
Fine. What was the third one, Melody?
There's Freedom. There's PHH.
Is there any way you can say Freedom like Braveheart would say it? Anyway, forget it.
United
even if we're talking about the demise of the economy, we could still joke around.
That's right. We have to joke around.
I got to look at the symbols. I can't find the symbol like that. PHH.
United Wholesale.
You guys who are watching this, you know when I'm actually writing this shit down, I'm serious. Normally I just no, I'll look at those. I really will look at these.
I don't see
I think it's UWM, I think is what it is. United Wholesale Mortgage, but Freedom Mortgage is another one. UW's a really big one. I'm trying to think what the symbol is, but
looks like it might be this UWN Holdings Corporation.
Yeah.
Wow, that's garbage.
Yep.
Anyway, it's not investment advice. I'm going to take this stuff off the screen, but Mr. Cooper's the front run for those of you who are not taking the investment advice that's going on here.
And by the way, they were just purchased by, it hasn't gone through yet. It's been approved by Rocket. And so this is a sign of severe distress in the industry when you start to see these types of mergers. And they have Mr. Cooper has a very aggressive debt maturity schedule.
So Bobby, that's the play, because we can make a fundamental argument that Mr. Cooper's been buoyed by the fact that they're being taken over, particularly if it hasn't gone through yet. That gives an opportunity of an elevated price that might turn south quickly, which, by the way, not investment advice. I'm talking
still
to
for
Bob.
me, I play that in puts. There's no way. I don't know what
Oh,
the
I'm not going to
options
short
market
the stock.
is.
I'm going to buy puts, right? If I do that. Bobby?
Yeah. So my wife and I are actually talking about downsizing only because I've actually rented almost as much as I've bought. And my whole reason for that is, number one, I like being an active investor, right? So putting money into a house, I think a lot of people, they go, well, I paid 350 for my house. I sold it for 500. I made 150,000. No, you didn't. You didn't. You paid taxes. You paid insurance. You made upgrades. You paid for repairs. You paid for lawn maintenance. There's all these kinds of things that people pay for that they never subtract from the difference in the two things. That's number one. Number two, I've always hated the idea of being stranded somewhere. And if any of my neighbors are listening, you're all good people, but this HOA sucks ass. And I'm stranded here because we bought this house, right? To a certain degree, obviously. So we've talked about downsizing and just saying, you know what, let's get rid of this place when we can. There's no rush. It's not a big deal. We can manage, but let's get rid of this place when we can and rent a couple of years. Is this the kind of timing that you see as rent a couple of years and then go back into something? Like if we get beat up in this particular cycle that you believe you see, is it a medium term, long term? What do you think about that?
Yeah. So, everybody's position.
Timing's hard, but
Yeah, timing is really hard and everybody's position is different. But right now you've got rent specials out there, Bobby. You've got all this luxury multifamily they built in Florida that nobody's living in.
packed with it.
And you can just say, give me 3 months free or even 6 months. I mean, there's all kinds of things you can go negotiate right now. I think there's a possibility this is it for the housing market. And what do I mean by that? I mean that speculation is over because your demographics are just so abysmal. And we have over 15 million boomers leaving us between 2025 and 2035, and 23 million leaving us between 2035 and 2050. But they own the majority of the homes. And their kids can't afford them. I'm helping several people right now with heir situations where they've inherited a property they can't afford that they're trying to sell, or someone took out stupid leverage on it and they're about to lose it in foreclosure. And so it's just, I think that we could actually correct all the way from here. Go ahead.
Things like Airbnb and Verbo contributed to this. There's this group in Florida called, I forget what they're called, Fort Lauderdale Vacation Rentals or something. Two really nice guys. They're married. They're incredible decorators. That sounded like I was implying something. Well, I guess I said they're guys that are married.
Wait, how is that insulting the gay community to say they're great interior decorators? They are.
Listen, I actually, because I just did that, I'll look up the name of their website so people can look them up. Their homes are amazing.
You complimented them.
They're amazing. They're clean. They run it themselves. And they've got like 14 of them. And one of them, I guess, is a realtor and one is something else. I don't know what. But has things like Airbnb and Verbos contributed to this? Because there's all kinds of like idiots on YouTube saying, I can make you an Airbnb millionaire.
1,000%. And when I was down in Florida living there, I was helping a client who was a non-qualified mortgage lender. They lent to these Airbnb bros. I mean, that was primarily what they did. But this is absolutely this is one of the biggest contributors. And they went into the lender and they used a program like AirDNA that said, oh, Kyle, Texas, you'll be able to rent that out 55% of the year and get $600 a night in an average daily rate. If anybody knows where Kyle, Texas is, it's 20 miles south of Austin, and there's no way in Hades you're getting $600 a night. But that technology program said it. And so these lenders went and they lent based on really faulty technology and assumptions. And that's what I said. They would walk into these lenders and the lender would say, why buy one? You can buy 10. So this is all over the place.
Fort Lauderdale stays, just so you guys know, their properties are beautiful. We've rented from them for weekends multiple times just to go to the other side of the state. Sorry, Jimmy.
No, it's quite all right. So you mentioned something before about bifurcation. On our show, we've been talking about the economic bifurcation that happened over the last 5 to 6 years that has been staggering. I think the rich got real rich and the middle got gutted and the poor got government handouts. Anyway, I think that it was one of the most irresponsible things I've ever seen government do. That being said, I think the top 20% are flush as hell. So the question becomes, like, okay, I'm not trying to boast about my neighborhood. I've been working for 40 years. Okay, so I'm not sad that I own a nice home, but I own a nice home, and there is nothing for sale in me or the 2 or 3 neighborhoods that surround me that are all of similar socioeconomic status. There's nothing for sale, and there doesn't be very often. Are you seeing a huge bifurcation at different levels?
I am, but I'm starting to see weakness in those very wealthy areas. I'm starting to hear about canceled sales in Westchester County, on Long Island, places like this. Your super prime are getting hit, Jim, and badly. And also, they understand that they're not going to spend stupid money. Why would they keep 10 houses when the insurance is ridiculous, property taxes are ridiculous? And now that I say this, just keep your eyes peeled for articles about, movie stars, people listing their homes, or watch just one market and watch the luxury. And so I have a feeling in your area, give it a few months, you're going to start to see more than you would expect be available.
Because my daughter's actually looking for a home in some of the neighboring, not exactly our neighborhood, but close. But you might have saved her some bucks, and I appreciate that.
I think
Bobby,
part of it, Jimmy, because I obviously know where you live, is that there's a lot of families around your age. So as the kids grew up together, they all went to school together, and the parents were all successful and they were stable and they were raising their kids, and you live in a great neighborhood for families. And I think that might have a lot to do with it as well, because as the kids move out, you have a restaurant close to your home, so you're not leaving. Right. Some of these people might go. As a matter of fact, somebody you and I both know, first name is Lex, him and his wife are spending more time here where I am, traveling back and forth, and his wife wants to leave Illinois completely, and he doesn't, for obvious reasons.
You've been to his house here,
yeah,
right?
Yeah,
it's pretty amazing. He's got a basketball court in his house.
Yeah. But he's spending more and more time down here. I've seen him more here than I have up by you, and I think that might start changing things. Whether that's because of I don't think that's because of economics. Certainly not with Lex.
Yeah, right. So Bobby, I had a question for you. Is it possible for you and Mike for this week's newsletter to do any sort of dive into those non-bank mortgage lenders?
Yeah.
I'll tell you right now, this is really compelling to me. And as you guys know who watch this show a lot, sometimes I'm like, yeah. But Melody knows what she's talking about. And this to me seems like a pretty dire warning. I'm still wondering where the flaws are in the argument. And I still come back to the government, particularly if Donald Trump gets a new guy in and they start buying MBSs again, like they've done it in the past. You say it just stems the tide a little bit. I guess I have no question. That's just the only thing. I'm just saying that as like a caveat.
Yeah. And I mean, Jim, like I lay awake at night thinking, what could they do? What they have done is GFC style response times 5 on the loss mitigation workout situation. What they did in FHA, just handed out cash. You didn't even have to call into the servicers. Okay. So that's with that forbearance during COVID, you could not pay for 18 months. And then when you came back and said, okay, I've got these 18 months, what do I need to do with them? You put them at the back of the loan to be paid off when you sell the home. On the Fannie Freddie side, those were not recorded. Okay. So those are silent second lanes that nobody knows about. And many of them are not reporting accurately to credit. So when you see any of those equity schedules, just take that with a grain of salt.
Is that a large-ish number, do you think? I mean, obviously you don't know the exact number, but
1.8 million as of the last of how many people as of the last report, and they stopped doing the report. So I think it's way more than that, because they were handing these out like candy. And so I agree with you, Jim. I keep thinking, what can they do? But I saw them buy MBS last time. I saw it not make a difference at all, really. And you would have to get rates so low. And what does everybody know? They know that actually buying MBS was inflationary. So you have a whole public that actually is way more aware than they were last time and understand. And so the outcry against that is going to be bigger this time, in my opinion.
Okay,
That's
I did
why I
bring
was so
them.
excited to talk to you is because, you talk to a realtor, and obviously you're much more than a realtor. You've been in the industry for, you can't be more than 8 years because you're so young. But you talk to a realtor and they're like, this is a good time to buy and it's a good time to sell all the time. Doesn't matter what's going on. It's a buyer's market. It's a seller's market. We have an open concept floor plan. Who doesn't have an open concept floor plan, by the way? They still consider that a concept. An open floor plan is a concept. Everybody's kitchen is now open in the family room. If they're not, they remodeled it.
Yeah.
Anyway, I'm getting aggravated. What I love about this is when you look at this administration, okay, and Jim and I get accused of being both anti-Trump and pro-Trump. So this is a perfect question. What perfect question? Nobody's ever asked a better question than this.
Bobby's been working on his Donald Trump. I think he's doing pretty good.
He's doing a good job.
Yeah.
Mhm.
Believe
I
me,
think
no
so.
one's ever asked a better question than this. When you look at this administration in its current form, the policies that you're aware of, are they helping or hurting? And any policy that you see coming down the pike, does that help or hurt your sort of, I don't call it a doomsday scenario, but your scenario on how?
Scratching immigration off my question list.
Yeah. So with respect to housing, every actual policy decision they've enacted has not been favorable to housing. Shutting down that FHA program, which will end at the end of September, just the most egregious, generous aspects of it that was being rampant fraud. Shutting down the loans to non-foreign or foreign-born individuals, shutting down some of these crazy down payment assistant programs. So they actually even got rid of the veterans loss mitigation intermediary program. I mean, which was kind of crazy. But they're taking it through Congress right now. So everything they've done so far has not been favorable to buoying the housing market. It has been favorable to getting home prices down, which I think they've really stated as a goal if you listen carefully.
Sure.
And you can see it in media now too. These high home prices aren't helping anyone. Yeah.
I'm sorry. So other than the veterans program, you seem to be saying that they cut programs that should be cut, but they're negative for the housing market in general. Is that correct?
Correct. Yes.
Okay.
And
Just
we
wanna
don't,
make sure I
that's,
see
that's, by the way, that's not hypocritical at all. I mean,
No,
some of these
this is
problems,
what they said.
yeah,
We're going to have short-term pain. He said,
yeah,
it
we're going to
over
have
and over
pain.
again.
You didn't mention immigration, so I'm unscratching it off. You didn't mention immigration because this is an area that I think I disagree with you just a tiny bit. I think the Trump administration is all talk about deporting 15 million immigrants. I know they've started to, and they've started with a bang. They have shut the southern border down from additional immigration, but I'm hoping that they'll encourage immigration in other areas. What part does immigration play in the housing?
These homes wouldn't have been built without immigration. I mean, there's no way. I mean, I went out to all these places, and it's so crazy how I was afraid to talk about it. I mean, I was afraid to talk about what was right in front of my face at every single one of these job sites, and I've been to thousands. So the housing market, what happened, that COVID boom wouldn't have happened without those illegal aliens building those homes. That's who built the homes. And so I also don't believe that they're going to be able to deport all these people. I mean, we need them for labor. And so, I want it to be a rational policy. I want everyone to know what's happening. That would be, and that we all agree to some sort of rational policy. But immigration factored very large. These builders would have never been able to get the margins they got to sustain this as long as they did, because everybody out there in FinTwit land wants to look at construction employment. We have no idea because these subs work for subs. And I've heard stories about people going back across the border because they don't have work. Meanwhile, you have someone, and I'm not dissing them, but someone like Cantro or Eric Basmajian saying, well, construction hasn't rolled over yet. I guarantee you it's rolled over in the number of employees actually out there constructing homes.
Well, this is one of those things that drive me crazy is when you hear people talk like this, they reference the years of illegal immigration, say, well, we never should have done that in the first place. Right. I shouldn't have drank a bottle of bourbon a week in my 40s, but I did. So I'm dealing with that now.
Right.
Okay. That's what I'm dealing. You deal with what it is, not with what you wish it had been. And it drives me
man.
crazy to hear that stuff. So now a lot of these like hard MAGA people, which again, they call Jimmy and I that almost weekly, that they're saying, you know, Trump's saying that he's got telling the ICE officers to lay off the hotel workers and the farm workers and stuff. Oh, he's going against the MAGA principles. Dude, shut up. Like, you're not going to like the result of deporting all these people, even if it was physically possible, Jim.
Yeah, no, I've been against the mass deportation thing as well. I think the giveaways should have slowed down to a stop, and if they want to deport themselves, that's fine. And in urban areas where there's a high concentration, they enact different crime policies. Which in Chicago, you have big immigrant homeless populations that I don't feel safe going by. But deporting 15 million people is asinine. Bobby, I have a quick question for you. You know, and this is Melody. Are you a dog lover or no?
I love dogs. I don't have one though.
Okay, so I just adopted this wounded duck dog who's been living on the street for a year, and she's got heartworm, and I have to drive her to Joliet and have her there tonight by 5:30 for her all day heartworm treatment tomorrow. So thank you guys for joining us. Melody, tell them where they can find you.
You can find me on X Twitter at M3_Melody, M3 Melody Substack, and M3 Melody YouTube.
And by the way, this is, again, the real estate market is an enormous part of our economy. If it starts to crack like Melody says it is, and I suspect she's right, this could be a big deal. I think this show, a lot of people are going to get a lot of value from the show, and I appreciate it. This is The Future's Edge. Remember to join us on The Unfiltered Investor. Both Bobby and Mike are going to do a deep dive into some of these non-bank mortgage lenders, and I think could be a very, very rare opportunity. This is not investment advice. Thank you again to Independence Arc Farms. You guys are the best. Thank you, Marco. The meat is fantastic. I love when it comes. It's like Christmas when it shows up at my door. But it is summer now, so people grab those packages quick. I had to eat a 2-pound sirloin the other day because it completely thawed, and my wife was like, "You're going to be eating a lot of steak." I'm like, "Challenge accepted." Anyway, this is The Future's Edge. I'm Jim Iuorio. That's Bobby Iaccino.